So I manage over $1 million worth of funded accounts, and the only reason I'm able to do that is because I only take a particular type of setup. Now, most of you are taking poor quality setups because you're impatient, and to be honest, that is the reason you keep blowing all of these funded accounts. The setups that I trade are based on the concepts in TRLS, and we call them A+ setups, but no, this is not just a fancy way of saying a position that I'm confident in. In fact, I developed a rigorous checklist of things that must be present before I take a trade, and doing this alone is what enabled me to become $1 million funded. And in this video, I'm going to be showing you the exact difference between an A+ setup and everything else, as well as exactly why being patient and waiting for those A+ setups is the fastest way for you to become funded and start achieving payouts. So if you're serious about passing your next evaluation and getting consistent payouts from the market, do not skip any part of this video. Let's get into it. Before we even get started, most traders actually fail before they even get to the charts because they don't have a definition of what an actual A+ setup actually means. Now with me, there's a strict set of rules and regulations that I need to see within the charts, otherwise I'm not taking a trade. Now this is not something that's subjective, it's not a feeling of confidence or something like that. It's purely a checklist, and if all the boxes aren't checked, it's not A+, period. Now this is exactly what separates you from failing to passing evaluations. So what is my TRLS A+ setup checklist? Now, number one is going to be extremely simple. I obviously need to see a setup being formed in the charts, and that's going to be one of the setups that I've taught in my previous videos. If you want to learn how to trade these in detail, make sure you go and check the previous videos on the YouTube for free. They are extremely detailed and teach you exactly every single setup that I will take. But let's say, for example, now we need a setup being formed, and in this one we have a breakout. Very simple setup, but again, very useful. After we have that being formed, number two is very simply market structure. Now, is the market structure in the direction that I'm trying to trade? Now, realistically, I don't know why I see this so often, but when I scroll through Instagram or when I'm looking at traders online, I see so many people trying to predict when the market is going to reverse. I'll see traders trying to top tick the market when we're bullish and try and catch sells. And I'll see traders, trying to catch a position basically against the market structure. Now, this is like trying to swim against a river when it's going in the opposite direction, right? It's going to be a lot more difficult. Most likely you're going to fail. And if you do succeed, again, it's going to be so much more effort for absolutely no reason. So if I'm looking to take buys, I need to see that the market structure is bullish. And the very simple way to do that is obviously by looking at market structure on the charts. Draw it out with an actual arrow. And if you're starting to make higher highs and higher lows like this, then good, you can take buys. But if the market's doing something like it has been previously, where you're making lower lows and lower highs, then very simply, I'm looking for sells. Now, once that's in place, the next thing I need to see is liquidity. Has enough liquidity been grabbed from the opposite direction? And essentially what that means is quite similar to the market structure. If I'm trying to take buys, I want to see liquidity being grabbed from the sell side, from below. And if we want to take sells, I want to see liquidity being grabbed from above. Now, the way this would look would be very simple like this. If we're looking to get in a buy position around here, let's say, your position somewhere around here. Have we swept any lows in the past? Well, obviously, yes, we have down here swept a few lows, meaning we've grabbed liquidity, maybe some orders resting below here, or it might be something just as simple as, if you're trying to take a buy off of this candle, did this candle come down and grab a bottom wick? If so, great, that's liquidity. Whereas if you were trying to take buys in a situation where you hadn't grabbed liquidity, let's say somewhere like this, you've swept no lows, you've grabbed no bottom wicks on any of these candles, and if they are, they're very small. And in fact, all of the liquidity, the large wicks in the past, are actually coming from the upside. So realistically, we have more liquidity pushing us down than we do upwards. So all I want to see very simply is some form of liquidity grab. And again, I have videos in more detail than this on my channel, so go check them out. But again, liquidity from the opposite direction, and that is what enables the market to push. So if we're looking for buys, we need to see liquidity taken from below and vice versa. Number four is essentially volume. Now, is there enough volume in the market? Now, I'm not looking at the little volume indicator with the bars on the bottom. I'm not looking at any sort of indicator for that. Very simply, are we during main trading hours? So main trading hours is obviously going to be New York Open, NYSE Open, COMEX Open, whatever it may be. And the most simple way to see volume is how fast is price moving? If it's moving like a snail's pace, we're consolidating, moving extremely slowly, something like this right here, there's not much volume, you can't be trading. The candles are super small, they're barely moving. If you're seeing candles move extremely fast, then obviously you can take positions because there's lots of orders coming in. That is that simple, but people love to overcomplicate volume. Now, these are my three main confluences right here. And essentially, if you group these together, I like to call them DLV, right? So you've got direction, which is market structure, liquidity, and volume, DLV. Very simple, check for those being present, and if they are, then great, you can go ahead and take a position. As well as that, one of the things I'm looking for the most is fractal time frame structure. So essentially, how does price look on every single time frame? Most traders stay linear and they look for the 30-minute or the 15-minute or however one time frames looks. I'm looking at every single time frame to see if they are in confluence with my trade. So if I'm looking at a 1 hour position right here, cool, the 1 hour looks okay, it's bullish structure, great. Well, actually, what does the 30-minute look like? Well, actually, the 30 minutes closed extremely bearish, and you've actually grabbed some top wicks here and made some strong bearish candles. So would I want to be taking buys right now? Maybe not. 15 minutes saying the same thing, and the 5 minute is also making some bearish structure right here, breaking these lows. So I'd probably be staying out. But if every single time frame from the 5 minute all the way up to the 1 hour is looking good in terms of, the structure being in line with your trade, then go ahead and take it. That is a number one confluence. When you have all of these things being aligned, that is how you know the trade is most likely going to go in your direction. And the final thing I want to be looking at is price action mirrors. Now, this is very simple, but previous price action actually tells you a story of where current price wants to go. And I'll give you a very clear example of this. So essentially, a price action mirror is a previous price action pattern that's played out on the charts that's happening over and over. And that is actually what allows you to understand and predict whether the same thing is going to happen again. So if you break this move down, it's very, very simple. First of all, you had a tap into this level at the 2500s up here, which is going to be number one. Now, essentially what happens next is you have a strong push down and a tap into this level down here at the 24,400s, followed by a strong rejection, which is going to be number two. And then you have a consolidated push up, followed by a higher high being made, a market structure shift, and a continuation upwards, which is number three. And then you have essentially the re-break of these highs to the left, which is then number four. Now, once that's happened once, twice, and a couple of times, this starts to become repetitive. So if we actually look immediately to the left here, you can see the same thing happens again pretty much immediately afterwards. And this happens repeatedly and repeatedly, and it's something that you can use as an extra confluence for your trade. Now, you can see quite clearly we have the same thing here. The push from the highs, which is going to be number one. You have a push down into that 24,400 area right here, the exact same level, which we'll call number two again. Then you have that higher low being made at the exact same area, which is number three. And then obviously we break that high, which is number four to the left. Now, let's say that you saw your setup print, everything's in the right direction, and you were somewhere around either number two or number three. Essentially, using this as a confluence allows you to expect and predict that the number four is going to play out next. You'd be getting into buys, and it'd just be a nice little extra confluence to have this position, this price action mirror playing out, so that you can have somewhere to target like you've done in the past. You could target the buys up to number four every single time. Now again, I have a more detailed video on price action mirrors on my channel, but again, that is a simple concept. If any of these five confluences right here are not present, then I am simply not taking the trade. This is why I only work for 3 hours a day, because I'm not sat all day looking for trades. I'm waiting for the A+ setup, and if something doesn't print, then I'm simply not taking it on the charts. Quality over quantity is always the way to go. And now that I've shown you all of these, let me show you some examples of some A+ setups that I've taken, as well as some setups that I haven't taken because perhaps something has been missing. I'll give you an example right here. Today on gold, this setup presented itself right here. We have a very nice push down, a liquidity grab, followed by a market structure shift, which for me is a very strong position and entry for buys. So you would either be looking to take a position on the flip of this hourly candle after the previous one closed above, or I would be looking to take a wick entry like this. Now you'll notice that this setup didn't play out, and I didn't take this, and why is the exact reason that I didn't? Well, very simply, a few things didn't happen, and that led to me not having trust in the trade. First of all, I have a no top wick candle here, which for me is a very strong signal of rejection. But as well as that, if you look to the left, I actually have a strong price action mirror playing out here that we've rejected from a similar area in the past, up here between 177 and 157, and following and continuing back down. So I would have actually waited for a closure above this level before I'd taken the buys, knowing that this is a strong area for liquidity. So the price action mirror confluence wasn't there, and I didn't take it. And look what happened. Following that as well, one of the main things that I looked at that stopped me from taking this position, even though the immediate short-term market structure had shifted, the 4-hour and the higher time frame market structure was still extremely bearish, giving us very consistent lower lows and lower highs being made, obviously enabling me not to take the position. That's 2 confluences missed, and that is essentially something like $10,000 saved if I took those accounts on my funded accounts and lost the trade with 1% risk, right? So I literally saved myself $10,000 by not taking it. Now, another example right here is actually what's forming right now on the charts. We actually have a very strong Sky Dweller setup, which is one of my trades, setting up here on the market as we speak. Now, the reason I didn't take this, the trade actually would have been on this previous bearish candle closure. You would have been looking to take sells and continue down towards the bottom of the range like this. You actually would have taken it off the break of this low, and you'd currently be in drawdown. And the reason I didn't take it is the time of filming this video is very late at night. The market's about to close, and there's low volume, low predictability. And like I said, you can't take positions outside of main session times because price action becomes less predictable. And it's just one of my confluences missed, again, saving myself some money. And these B and C setups are actually what goes ahead and ruins your profit factor. Undoubtedly, they ruin your profit factor because you're taking these positions. You'll maybe take 5 positions throughout the week. If you take 3 that are A+ setups, most likely they're going to be winners. And then the B and the C setups eat into your profitability throughout the week. You end up either break even or at a loss. Then your psychology goes, you're on tilt, and it all goes downhill from there. And talking about the topic of psychology, I want to talk to you about exactly why waiting for these A+ setups is such an important thing to do. Now, yes, strategically, it's very important to go ahead and actually wait for the right setups to print, because then you know your strategy is playing out, your data is aligned, and you have obviously a much higher chance of winning and being profitable. But taking strategy aside, from a psychological aspect, if you are taking a trade where you know in the back of your mind that something might be wrong, there's something missing from your setup, or maybe something that's telling you maybe I shouldn't take this trade, what's going to happen is when you're in the trade, you're going to be a lot more scared. There's going to be a lot more fear behind it, and you're going to be managing the trade based off of that in your subconscious mind. That results in stuff like closing early, or the moment you go into drawdown, you close out and then it runs back in your favor. Essentially poor trade management based off of the psychology of you not going ahead and actually managing the position or waiting for the position that you know you need to take. So realistically, from a strategic standpoint and from a psychological standpoint, it makes so much more sense just to be patient and wait for the A+ setups, because you're going to get trades that run better, have a higher win rate, and you're going to be way less stressed when in them, which is going to allow you to let the trades run to TP and obviously have a higher profitability. But why is it that traders are comfortable taking a B setup or a C setup or whatever it may be? The reason is impatience and FOMO. At the end of the day, if you can't wait for a trade to form, and you're waiting for a trade and maybe it forms 80% of the way, but you still take it, that is because you have FOMO, you're impatient, you want to be in a position, you want that dopamine, and you also want essentially to make money faster. But you need to understand the way to actually make money the fastest is to take the slowest route and wait for setups to actually print. Now, pause the video and let me know down in the comments, be honest with yourself, how many of you would have actually taken these trades? The B and C setups, maybe there was one confluence missing and you thought, yeah, you know what? Why not? Why not? Let me just take these because it's going to work out anyway. It's nearly there. Be honest with me, because I want to know, and I'm actually about to show you what an A+ setup actually looks like, and it's going to change how you see these setups forever. Now, this is one taken from this week. Very simply, a perfect setup. Now, actually what happened on this one is the setup formed relatively well the first time the candle broke out. So right here, you have essentially a range that we'd formed and then a breakout above the level. But one of my confluences, which is the top wick being left, hadn't lined up. Now, this is just something that's strategy dependent. So the setup hadn't actually formed correctly. For it to be a valid breakout for me, I need a top wick on the candle. And actually that didn't happen. So I wasn't able to take the first entry, even though some of my students ended up taking it and maybe getting a bit of a better entry. I was not able to take it. I had to wait for the next 15-minute candle to close right here and then go ahead and take the entry after that. But after this 15 close like this, that was the perfect A+ setup, and I'll show you why. First of all, we had a range being formed and a breakout, which is perfect. But you can see quite clearly here, before we broke out of the range, we have a very strong grab below the range, like this on this candle right here. You grab below the range and essentially then broke out to the upside. So we have our liquidity being grabbed from below, which was the first confluence. After that, obviously, we have bullish market structure being made. As you can see quite clearly here, you started to make highs like this. You made higher highs, higher lows every time. And then obviously after you break out of this consolidation, you break above these highs to the left here, forming a higher high. And obviously that is the trade that I then ended up taking up to the highs. After that, obviously you had volume. It was during the main session, right? This was during London at around 11 o'clock UK time. So peak London, essentially, very, very clean position. And yeah, you have the direction, you have the liquidity, you have the volume. Finally, the price action mirror. After you see this to the left, you're going to understand completely. Every single time to the left of this that we closed above this level at 82, what do you see happening every single time? Well, you have a strong closure above, a liquidity grab down into, to be honest, not a very big liquidity grab, but down into these areas here, which this one for me was enough. It didn't come all the way, but for me, that was enough. And then obviously the continuation all the way up towards these highs up here to the left. And you can see we did exactly that on the price action mirror. Not only that, we also had the exact same thing being formed with the liquidity grab. You can see before we made it this stronger move here, we ended up grabbing liquidity. In this case, you grabbed it from a little bit lower, but last time you grabbed it from down here, this time we grabbed it from here. So the same move had applied and everything was aligned. Absolutely perfect A+ setup. Now, another setup that I ended up taking a while back was actually one of these trades down here. Let me just show you. It was this trade right here. You can see quite clearly we had a sky dweller being formed, which is one of the main trades. Again, another YouTube video on my channel detailing that. But essentially, I ended up taking buys from this candle closure right here. Stops were below this area here. And I actually took the TP all the way up to these highs. But I think I ended up closing earlier as we swept this liquidity high here to the left. Now, this one essentially was an A+ as well for all of the reasons that I've just told you. First confluence, we have the market structure. Obviously, we are extremely bullish here, making moves up the entire time, so nothing to worry about with the structure. Liquidity as well, where we swept multiple lows, but again, we ended up sweeping the lows here with a big bottom wick before this candle closure, and then a bottom wick when we actually ended up entering the trade. As well as that, following this, we have the price action mirror of what happened last time when you come and close exactly like this. You have a push up, followed by a strong closure like this, grabbing a bit of liquidity, following in a continuation up towards these highs, which we inevitably take out. As well as that, very clear, again, middle of London, actually pre-NY I would call this. But yeah, strong volume, and obviously a great liquidity, direction, volume, everything aligned. So I was more than happy to take this trade. Now you can see quite clearly, this is what happens when you wait. You'll notice how I've labeled two trades here, a couple of weeks apart. To be honest with you guys, for the past few weeks, I've been taking 1 or 2 positions every single week because the A+ setups haven't been forming. Last month, I was getting a lot of trades. I was getting maybe 4 or 5 trades a week. This month, it's slowed down a little bit. My A+ setups are forming a lot less frequently, but that doesn't mean anything. I don't change the frequency of my trades. I don't change how or what I'm looking for in order to quantify an A+. I just simply stay patient and wait. And these are the results that happen when you wait. This month alone, I'm up $10,000 across my funded accounts. I've reached $1 million in funding. And essentially, this month has been one of the best months of my trading purely for that sole reason. Now, if you actually do the maths on this, you'll understand why. Taking 5 A+ setups compared to taking 20 B setups or C setups is just incomparable in terms of the results that you're going to get, right? So with TRLS, I have an 87% win rate on my A+ setups. And with a B or C setup, you're most likely going to end up with around a 40 to 50% win rate. Now, what that means is if you're targeting a 1-to-1 or even less than a 1-to-1, you're just making less money. Very, very simply, you're making less money. It's taking essentially a lot longer for you to become profitable, if you even can become profitable at all. Now, it's one thing me saying this and showing you my own trades. Let me show you someone who I've implemented this system with, who's actually ended up getting results. Now, my student Dorian essentially started working with me when he was fresh to trading, and essentially he was taught good habits from day one. And that actually ended up in him essentially learning the good habits, and only taking A+ trades from the very beginning. And the result that ended up coming from that was Dorian ended up grabbing 20K in payouts within the first couple of weeks of his trading, which is just absolutely ridiculous. You'll see right here, you have all of these payouts from Top Step that he took that were in the first couple of months of his trading, the first few weeks after he became funded. And the reason being is I taught him exactly what an A+ setup was. We talked about psychology, about the patience behind waiting for A+ trades. You can see on the interview that I have with Dorian on my channel, he says exactly that. The patience behind it, taking only A+ setups, is exactly what resulted in him becoming funded and getting over $20,000 in payouts in just a few months because he was only taking the A+ setups. But here's the part that's going to blow your mind. And this is actually how I built my $1 million funded portfolio. Now, let me explain. Most traders put their money into one account and they hope for the best. They put all of their money into a one funded or a live account, but I use the shotgun method. Now, the shotgun method is something I've used to combine these A+ setups with actual aggressive trading in order to scale extremely quickly. And this is what allowed me to reach $1 million in funding in only 2 weeks. Now, how this actually works is very, very simple. The process goes like this. First of all, you're going to go ahead and buy multiple Apex 50K accounts. You're going to be using code TRLS for the discount because right now you're going to get 80% off all your accounts, meaning a 50K is only going to be $30. And you actually have $85 activation fees, which is ridiculously cheap. You're going to trade them one at a time, and you're going to wait for the A+ setups using the confluences that I just taught you in this video. Now, you're going to wait for the A+ setup and risk 2 to 3% on that trade. And if the trade goes into drawdown, but you're still confident because the setup was an A+, simply switch over to a different account and enter the trade on account B for a better price. Now, you have 2 positions across 2 accounts. When the first one goes to break even, you can either manage the trade or let them both run. And the likelihood that you become funded is going to be massively, massively increased. But the thing is, this only works because you're not gambling across all your accounts at once. You're not taking random positions. You're waiting for the A+ setups and just entering aggressively whilst managing your risk. And this is exactly how I passed 20 funded accounts in literally like 2 weeks. But the only rule for this is it only works if you're taking A+ setups. If you use this method on B or C setups, you're going to blow every account and the system is not going to work. But here's the reality. Identifying A+ setups sounds simple when I show you it on the charts, but when you're staring at the market in real time, it's completely different. You know, you start guessing yourself, is this an A+ or maybe it's a B setup? And essentially, this is where most traders fail. They don't know essentially how to double check their work, or they don't have someone to double check it for them. And that's exactly what I do in my inner circle. You send me your setups before you take the trade. I tell you if it's A+ or not, and you learn to see exactly what I see. Now, 80% of my students inside the inner circle pass funded challenges within their first month using TRLS, but more importantly, they stay profitable after passing because I'm there to double check their work until they don't need me anymore. Now, if you're tired of guessing whether your setup is good enough, the link is in the description. Now, I only opened limited slots because I personally work with every student. But all right, let's get back to the video. This is going to be your action plan. Here is what you're going to do after this video. Create your A+ checklist. Step number 1, write down your exact criteria for A+ setups. If you don't have a system, you need one. TRLS is mine. You can use exactly this. Learn to trade exactly like me, but be specific. Setup looks good or high confidence is not a checklist item. Number 2, you're going to review your last 20 trades. Go through your trading history and be honest. Honest question, how many of these were actually A+ setups that you're taking? I guarantee you that most of them were B or C setups taken out of impatience or FOMO or something like that. Step number 3 is you're going to commit to A+ for only 30 days. I want you to trade only A+ setups for the next 30 days. This is very, very, very important because essentially what's going to happen is if you're taking setups that are not A+ and you're essentially journaling, collecting data, that journal data isn't actually tracking the strategy of the system. It's actually just tracking your FOMO, which realistically, why would you want to track that? And the next final thing is going to be your mindset shift. You're not looking for trades. You are waiting for A+ setups. If you don't trade for 2 days or 3 days because there was nothing that was A+ or perfect, then so be it. The market is always going to give you an A+ setup. It's the gap between them just might change, but be patient and wait for it. Now, if you're wondering how long it takes to get good at spotting A+ setups, let me be real with you. It took me 12 months to become consistently profitable. Now, I could have been 6 months if I had a mentor from day one, but realistically, most traders without a mentor is going to take you 6 to 18 months if you are lucky. Now, the ones who make it faster have someone who's double checking their setups every single day. You can realistically watch 100 YouTube videos, including this one, but you need real-time feedback and you need someone to keep you accountable. Now, the proof is in the pudding. One of my other students, Isaac, the next day after we jumped on our first call together, had realized and had an aha moment about the fact that he wasn't taking A+ setups, and he actually ended up passing a funded account within the next couple of days. Another student, Rahid, went from failing to becoming a full-time trader, 200K funded, and multiple payouts within his first month because he learned how to trade the A+ setups. And obviously, me, myself, having $1 million in funding right now with over $100,000 in payouts speaks for itself. But here's the choice you have. Now, path one is try and figure out the A+ setups alone, and essentially for another 6 to 12 to 18 months, struggle, fail, maybe you get it at the end. Or path two is you have someone who's already done it to check on your work. Now look, whether you work with me or not, the lesson is simple. Stop taking the B and C setups, stay patient, and only wait for the A+ setups. Now, you're not going to trade your way to consistency by taking more trades. You're going to get there by being consistent, staying patient, and waiting. Now, if you want to learn how to identify these A+ setups exactly how I do to achieve an 87% win rate because I'm so selective, and you want someone to actually double check your work and pre-check your trades before you even take them, the link to the TRLS inner circle is in the description. Now, I only open 10 slots at a time because I'm working hours and hours on end with you individually, and I simply don't have the time to work with many people at once. And when it's full, it's completely full. No more slots. Again, whether you join or not, stop taking trades that don't fit your criteria. Build a checklist of what means an A+ setup, wait for that to happen, and when it appears, take it and be confident in the trades that you're actually entering into. The market rewards patience and not activity. Now, if you enjoyed this video, leave a comment down below telling me how many of your last 20 trades that you took were actually A+ setups. And be honest with yourself, it's extremely important. And if you want more content like this, subscribe to the channel. I post content, trade breakdowns, and trade live on YouTube for free every single week. So click that subscribe button and I'll see you in the next one.